What's up, guys? Albert from thatfxtrader.com bringing you guys another video. In this video, we'll be reviewing how to gauge pullback when in a state of a short-term reversal, especially since this is precisely what is happening in the current market structure. So with that, guys, stay tuned to find out more. All right, guys, let's get right into it. So one thing to take into consideration, especially with what's going on in current day structure, is that a lot of the pairs are starting to liquidate after the initial impulses that were made, at the beginning of May, right? And we can understand why they are occurring. And so this video is going to be really important for the sole factor that it's going to give you guys indications of how you guys can potentially gauge this current pullback and really what's going to warrant, okay, are we going to get another one of these again, right? Or is this just simply going to be acted as relief for another continuation down? And this is precisely what this video is going to serve. It's going to show you guys, ideally how to treat these current short-term liquidations until you have a clear and definitive direction. So right away, guys, let's get on to the weekly time frame just to look at a couple of things straight away. So one thing that you have to take into consideration about euro to US dollar, right, is that there were true trends that formed. After we broke out of this 3-year consolidation, right, we did see that initial impulse to the upside followed by a short-term liquidation and continuation of that initial momentum. Now, one thing to take into consideration is that this was the first trend that formed before any type of pullback, with this being the second one, right? And so now that we look at it, right, we can see that structure, when it did make its second push, right, that it did create a base, some type of liquidation phase, and things of that nature. Unfortunately, structure did in fact break the lows, creating lower lows, and with that initial impulse became invalid, hence warranting that as the current impulse, which is why, guys, this video is going to serve. How are you guys going to gauge this, right? And more importantly, how do you treat such a reversal, right, when in an environment that completely invalidates a play, right? And so one thing to take into consideration is that, is the bullish momentum over? No, but who is definitely in control right now? Definitely the bears. The only thing that I'm highlighting here is showing you that, you will see pending orders sitting there, and you'll definitely see potential bullish movements there, simply for the fact that back in the day that did act as a really strong dynamic support sitting right here. So it does make complete sense why this should start potentially pulling back, reversing, or exhausting. And so looking at that, guys, on the daily time frame as of right now, we can see here that structure is forming something very similar to what had happened back in November, right? We did see somewhat of an impulse, a false break of that monthly support, and then from there, a pretty strong push to the upside, which is something that we are seeing as of right now. And so we are looking for that initial leg to the upside. But for this video, guys, we are going to gauge when that does in fact happen, especially looking at the smaller time frame. How can we gauge this pullback? And so let's get right into it. First and foremost, notice what happened in the past, right? Once we broke out of that small term reversal pattern after that initial impulse, right, we did make a strong enough impulse to the upside, followed by a short-term continuation pattern. And with that, guys, all these short-term flags that I'm highlighting are viable plays. But the one thing to take into consideration, especially in the past here, was where was the initial impulse? Downside. Hence, regardless of how this is moving, this entire structure is going to be treated as relief, liquidation, profit taking for further continuation down, unless we did in fact break the tops, right? And in this instance, we did, right? And once we did that, we in fact said, you know what, the bulls are definitely in power. But now the game has changed, because notice how we in fact created lower lows, warranting that momentum switches from ascending to descending, hence invalidating this momentum. And so now the question is, okay, now we're in a different environment. How do we go about it, since there is no highs anymore? So where could we expect structure to go to? Well, if you've taken my course and you and my students know exactly what I'm talking about in reference to the two types of retest, we can see that previous structure was in fact broken right here, right? And so with that, we've never actually gotten a structural retest within that area. And on top of that, if this is going to be the initial impulse that's going to form at some point, that trend continuation back to the downside, right? And that's going to be the entirety of the structure. This, without a doubt, has to pull back. And so this video, once again, will show you guys how to gauge that pullback. And so with that, as of right now, in the area that I did state, that's ideally where we are going to expect structure to come and pull back into. And so with that, and once we go into the smaller time frames, you guys will see that we're going to treat all the short-term bullish movements to the upside as higher risk, or at least moderate risk, and definitely short-term, because we are going to be treating this as all liquidation because of that initial impulse. Which brings me to my first rule when gauging a pullback. Any type of continuation pattern that you take in a pullback, liquidation, profit-taking type of phase must be warranted as short term, simply for the fact that it could equate to moderate risk to higher risk, simply for the fact that this is treated as relief, as liquidation, because of that initial impulse to the downside. Rule number one, any trades that you take, they're not warranted as counter trend, but they're warranted as short-term continuation patterns for the bigger push to the downside, because you are factoring in that initial impulse. So keep that in mind as we go along with this video. Now let's pop to the 4-hour time frame, as you guys are having a better understanding of how we are gauging this pullback. And so let's keep that area in mind of what we were stating before, of where we potentially could pull back to within structure, which we were stating, and my students do know this once again, that this right here was in fact the momentum retest. The 1 and 2, my students know what I'm talking about there. And so with that, what we are stating here is that this is the initial impulse to the downside, right? This is one straight movement. Now we can see that we did in fact make a false break of that monthly support, followed by a strong enough impulse to the upside. But at the same time, you want to take into consideration that this is treated as relief or as profit taking or liquidation, because of the initial impulse that occurred right here. So if this does fact break out, create short-term higher highs, you can take that trade. But once structure starts to indefinitely create higher highs, that's ideally when you're looking to close the trade, because at some point you're expecting some type of liquidation, right? And if it's going to continue, it's going to break out and start the same pattern that it did initially right here. Impulse, pullback, impulse, pullback, and things of that nature. But notice, guys, as I continue to draw the structure, if this impulse does in fact continue, and this does break out, right? And let's say it keeps legging all the way up, and let's say it gets to this critical area right here, my second area of rejection. If you look at how the formation will occur, it will still look as relief or as liquidation, because you are factoring in movement 1. And so movement 1 versus movement 2, right? I would still take movement 1 as the sole players in power, and structure 2 as the people that are just simply moving or liquidating from that number 1 movement, right? And so as of right now, we are looking at this as every time you take any type of continuation pattern, right, everything will be warranted as short term. And so with that, guys, looking at structure as of right now, this is how you would gauge a pullback. You guys would simply make sure that A, you're keeping in mind that everything is short term, because it equates to moderate risk or higher risk because of that initial impulse to the downside. Hence, you're treating this as correctional relief, right? Because at some point, you're expecting that downside play, whether it occurs here, or it continues to move and drops, or it continues to move and drops, or it continues to move and drops one last time. You guys would be like, how could you treat that and state that we're still in a bear market? Well, I'm still going to say that that movement is significantly bigger than this entire correctional relief or liquidation, right? And if you guys are still not familiar with that, go take a look at the previous webinars. You'll see exactly how pound dollar in the weekly time frame looks exactly like this, and now it is making its continued impulse. And so with that, unless structure in fact made a strong enough impulse above that previous area that we were marking to the left, right, we are still going to target downside. Hence, rule number 2, every time you take a trade within a liquidation phase or a pullback, you ideally are looking to close at the first take profit, or you are looking to close once those highs or lows break. Hence 1, 2, 3 patterns. My students know what I mean. You guys don't know what a 1, 2, 3 pattern is. Notice it makes an impulse, a pullback. Once that breaks out, your target is to go back to the tops. 1 is your impulse, 2 is your pullback, 3 is your continuation. If you break the tops at some point, you are looking for some type of deceleration or reversal pattern, and that's when you would close the position, right? And so ideally, when you're in a liquidation phase, right, you are looking for short-term continuation patterns, 1, 2, 3 patterns, looking to close at the tops, or 1 to create higher highs or lower lows. Number 3, you are running them to key levels. That is simply all you're doing, level to level, zone to zone, fib to fib, trend to trend, right? And notice, you see every single time where I was stating this could potentially fall off in first marking the daily resistance. And I am stating if we do break the weekly. Then I'm stating, okay, if we break the weekly right here, right, then you know what, we should go to daily. If we break that, we should go to daily. You should not expect anything more than that, okay? And then number 4, you are gauging how close am I to that ultimate goal of that structural retest, right? And what we were stating here was that area to the left that we saw in the daily time frame. Because this right here will tell you and gauge for you how much risk is going to be truly associated from you. Because if you look at this from a roller coaster perspective, and you said that this was the beginning of the roller coaster in the uptrend, and you guys entered here, and let's say it's creating higher highs, etc. And I know there's a bunch of scribbles on the chart, apologies, but work with me. Let's say we're creating higher highs here. You're still good to go, right? But as this trend continues, your risk starts to become much more increased for the sole factor that at some point you're expecting that big drop, right? And so that would be the fourth rule, gauging where you are within structure to associate how much more risk is associated to you. Because one thing that you want to factor in the end of the day is if you're taking this continuation pattern and then it pulls back and then you're taking it again and you keep riding this wave, right? If you enter here, right, you are no longer in the same risk exposed environment that you were here, right? Simply for the fact that the trend has already taken off for quite some time. So once again, you are gauging how long do I have left before potentially that happens, right? Because I know at some point, if I zoom out, that there's going to be a tremendous amount of pending orders sitting within this previous region. How do we know that? Well, the buyers fought so hard for so long to protect this area, right? And so if that's the case, the sellers now say, this is my area. I own this area now, right? And so when in a pullback, guys, and just to keep this into consideration, anytime you're taking short continuation patterns, you're first making sure that you're following those little steps. And secondly, and more importantly, you are gauging what is the risk exposure associated to me. Of course, there's a bit more risk associated to you because you're trading in a liquidation phase. But at the same time, the risk exposure can increase if you start entering in areas where potential pending orders may come about. A, B, and so forth. And so with that, guys, you want to keep in mind one last time that first you are keeping every single trade that you are taking in a liquidation phase as short-term, moderate risk, or higher risk, dependent on where you are in that entry. Secondly, you're looking for those continuation patterns, right? You're looking for those 1, 2, 3 patterns, short and sweet. Nothing bigger. These are not your big swing trades. These are more intraday, potentially max 12 to 24 hours, right? Number 3, right? Once again, you're taking into consideration where are we within structure, right? Number 4 comes into play of the structural retest. And apologies, I didn't write number 3, right? But where are you within structure? Are you entering a continuation pattern? And what is your goal in the end of the day of this trade? Ideally, you want to keep these 3, 4 things in mind, right? Where you are within structure, right? But, and I know I skipped one from the previous 4 list, but ideally, the main things that you're keeping in mind is risk, risk, risk. How much more room do I have to go before that ultimate goal? Because ideally, guys, you can take these trades. And these are the trades that you can take. And you can ride them all the way to the 121, 122 handle. And it's not to say that these trades are invalid, that they're counter trend. It's just to keep in mind that, you know what, they're short term. The bigger picture is still to the downside. I'm still looking for this. And the only way that this pullback now becomes invalid and definitely warrants as that initial impulse is if and we in fact now gain back control above that previous area that acted as dynamic support, hence invalidating this impulse. And then from there, what you guys would be looking for is a short-term continuation pattern, small flag, and look to run that all the way back to the tops, right? And so with that, guys, this should have showed you guys exactly how to gauge a pullback. What are the things that you guys need to take into consideration? One thing that you guys need to always keep in mind is where you are within the environment, where you are within structure, how much movement do I have to move from a bearish perspective and a bullish perspective, how much risk associated is to me, and more importantly, how much movement is left before that bigger play potentially could come about. And so with that, guys, I hope you guys enjoyed this video. Stay tuned, as the next video that's coming out is going to be going over exactly how you guys break down the subconscious mindset and why it's so important related to the Forex market, especially for traders in general. If you guys enjoyed this video, please leave a like as well as a comment on what you guys thought about this video down below in the comment section, as well as if you guys want to stay up to date with what I'm doing, what the team is doing, please hit that subscribe button. It helps a lot. With that, guys, I hope you guys had a wonderful week in trading. I hope this video guys helped. I look forward to seeing you all in the next video. See you guys soon.